Ratings agency Moody says there is a slim chance that it may change its stable outlook for the country, even though it is in a recession. The economy entered into a technical recession after registering negative growth for 2 consecutive quarters. Moodys is holding a conference on Sub-Saharan Africa in Sandton today. Moody says it will be looking for a commitment to fiscal consolidation at the October medium-term budget policy statement on October 24th in order to maintain its outlook. Moodys more than halved its forecast of South Africa's GDP growth after news that the economy fell into a recession in the second quarter. The agency expects the economic recovery of the country to be slow. Moodys is the last of the ratings agencies to rate the country's long-term foreign currency debt at investment grade. Well, she's usually on the desk, but this time she's following this story for us. Nompumelelo Siziba, live in Sandton there at the Moodys conference on Sub-Saharan Africa. Clear indications there that they still believe in South Africa, Nompumelelo.
Thanks, Arabella. Yes, they do still seem to believe in South Africa. They are rather concerned about the fiscal position. Of course, they put out a statement shortly after it was revealed that we are in a technical recession, saying that they were concerned about what this would mean for fiscal policy and how basically the government will be able to balance its books. There is concern, obviously, about our debt levels beginning to blow out too much. Our debt levels currently stand around, or they're approaching 55% of GDP. So basically they are concerned around that. The key things that they highlight are things like the wage bill. The government agreed to a much higher wage increase than they had originally budgeted for. They're also concerned about numerous other things that government seems to be covering. People have complained or criticized government for covering South Africans, for example, with that increase in petrol prices. 500 million rand, the government had to stump up for that. And of course, the energy minister, Jeff Radebe, has come out to say, guys, by the way, that was a once-off, because clearly it's not really sustainable. We have to go according to the way the market forces dictate. And so come next month, it's likely that not only will we have to pay further increases for, demand and supply, but will probably be lobbed on with extra increases from the subsidy that we got this month. So they're concerned about government, bending and stretching a bit too much and paying extra, more than it can actually afford, and that will blow out, obviously, the budget deficit. And concerns as well around higher interest rates. As you know, the United States is beginning to move, or has begun to move, in terms of higher interest rates. It's on a higher interest rate trajectory. And therefore, what does it mean? It's negative for emerging markets, because what happens is that people decide to take capital flight into the US dollar and move away from emerging market currencies like the South African rand. We have felt the pressure from that and other reasons as well. So, concerns around the higher interest rate environment. But one of the things that stands South Africa in good stead is that a lot of our government debt is actually in local currency. We're only exposed by about 10% to foreign currency debt. These are some of the issues that they've raised. Back to you, Arabella.
Before you head off, I just wanted to get some thoughts as well. Just as you make notion there and mention of that debt level for South Africa, it does bode us in very bad stead that if they were indeed to change that outlook from stable to negative, we then edge ever so closer, particularly on the local currency debt, to junk status, which then means we fall out of the bracket of the World Government Bond Index, or WGBI, which brings in about 100 billion odd every year.
Yeah, no, that is very dangerous territory, but I don't think we're there yet, because they're saying all the right things. They're quite confident, but they're going to be looking, obviously, at the midterm budget very closely. And if the wrong things are said, then indeed we could be put on that negative outlook, which would probably mean that the next strike in terms of their decision would be, we would fall under investment grade, which would be very negative. Moodys is the only one that has us at the moment but still in investment grade. So we are clinging onto them to remain hopeful and optimistic in the South African economy. Of course, if that were to happen and all those funds were to come out of the South African bond market, that would be extremely negative. It would mean the rand would depreciate, inflation would balloon out of control, the Reserve Bank, its hand would be forced, and they'd have to raise interest rates. And in an economy that's already in recession, that would just be disaster. So we hope that we don't get there, and that government, even though it's really under a lot of pressure, it will make the right policy decisions and obviously also implement them. You know, that wage increase that they're talking about, you know, north of 7%, they're saying that government can perhaps look at other areas, not necessarily the wages side, but the non-wage side in terms of the benefits, looking at how to maybe, you know, cut those or just refine those in a manner that there's not so much pressure on the fiscus. But that's a key issue that they've raised. And of course, that's a 3-year settlement. So assuming that they're going to not have to go with the flow 3 years hence, they're going to have to be very sensible in how they deal with the public sector.
Always giving us the news as best as she possibly could. Nompumelelo Sizeba, appreciate your time there out at the Moodys Sub-Saharan Africa conference happening in Sandton today.